Stocks and bonds have historically been the most popular investment choices for individuals who are interested in amassing a substantial amount of wealth. On the other hand, as the composition of the financial environment continues to shift, more and more people are turning to alternative investments. Alternative investments are any assets that do not fit into the standard categories of stocks, bonds, or cash. These investments can provide prospects for the creation of wealth that are not available through traditional financial vehicles. In this video, we will discuss some of the most common alternative investing options, as well as the potential benefits associated with each of those possibilities. Before we begin, make sure to like and subscribe to our channel. Real estate investments. Real estate is a physical asset that has been recognized for many years as a well-liked alternative investment option. Both buying and holding real estate for rental income and selling it for a profit are viable options for investors. People who want to invest in real estate but don't want to take on the responsibility of ownership often turn to real estate investment trusts, abbreviated as REITs. Companies that own, manage, or finance income-producing real estate are known as real estate investment trusts, REITs. They provide investors the opportunity to diversify their holdings and perhaps earn higher profits by investing in a portfolio of properties rather than a single one. The possibility of one's initial investment growing in value over time is yet another advantage of investing in real estate. When the value of an investment property rises over time, there is a better chance that the investor will make a profit when the property is eventually put up for sale. Moreover, investments in real estate can be a hedge against inflation because, traditionally speaking, the value of real estate rises along with the general increase in the cost of living. Private equity. The term private equity refers to investments that are made either by purchasing ownership holdings in private businesses or by purchasing public businesses in order to convert them into private enterprises. Investments in private equity are often made by institutional investors or wealthy individuals with a high net worth. Although investments in private equity are frequently highly illiquid, which means it is difficult or impossible to sell them, they frequently provide the potential for huge returns. Investing in private equity typically entails a significant degree of risk. Therefore, prospective investors should conduct enough research before making any commitments. They should also be prepared to fulfill the high minimum investment requirements. And before investing, they should think about how much of a risk they are willing to take on personally. It is also essential to keep in mind that private equity investments are often only appropriate for experienced traders who have the financial means to withstand a high level of uncertainty. Hedge funds. Hedge funds are investment vehicles that pool money from authorized individuals and invest in a variety of assets. Hedge funds invest in equities, bonds, commodities, and other financial instruments. Hedge funds are able to invest in a wide variety of assets, including equities, bonds, commodities, and derivatives, amongst others. In most cases, only accredited investors, which are defined as investors who have a net worth of at least $1 million or an annual income of at least $200,000, are eligible to invest in hedge funds. Hedge funds are notorious for their convoluted investment strategies, high-stakes gambling, and exorbitant fees. Investors who are thinking about putting their money into hedge funds ought to be ready to complete the necessary research and be aware of the hazards that are associated with the investment. They should also be prepared to fulfill the high minimum investment requirements. And before investing, they should think about how much of a risk they are willing to take on personally. Hedge fund investments are normally only suitable for experienced investors who have the financial means to take on a high level of risk. This is another crucial point to keep in mind regarding hedge fund investments. Commodities. Gold, silver, oil, and wheat are examples of commodities that can be purchased and sold on the open market. Commodities are also known as raw materials or main agricultural products. Because of its low correlation with other assets, such as equities and bonds, investing in commodities can be an effective strategy for diversifying a portfolio. Exchange-traded funds and commodity futures contracts both provide avenues for investors to acquire exposure to the commodity market. If an investor is thinking about putting their money into commodities, they need to be aware of the distinct dangers that come with investing in each individual commodity. For instance, investments in agricultural goods could be vulnerable to climatic conditions and natural calamities, but investments in precious metals might be susceptible to price manipulation. When taken as a whole, investment in commodities can provide investors with a potentially lucrative opportunity to diversify their holdings and guard their wealth from the effects of inflation. However, potential investors in commodities should be prepared to do their homework and have a solid understanding of the dangers involved before making any purchases. Art and collectibles. Art and collectibles, such as rare coins, stamps, and antique furniture, can be alternative investment for those who enjoy collecting and have an eye for value. Some examples of art and collectibles include antique furniture, coins, and stamps. Both works of art and collectibles can increase in value over the course of time and present a one-of-a-kind opportunity to build financial security. However, assessments of the value of works of art and other collections are often very subjective, and it can be challenging to forecast how much those items are worth. Before putting money into art or collectibles, prospective buyers need to do their homework and carefully decide whether or not to consult an expert assessor. As an illustration, the value of a painting created by a well-known artist could go up over time as the artist's notoriety spreads, and there are fewer and fewer examples of their work available. The lack of liquidity is another possible drawback associated with art and collectibles as an investment vehicle. When compared to equities and bonds, which can be bought and sold with relative ease on markets, selling art and collectibles can be a more challenging endeavor. Finding a buyer who is prepared to pay the asking price could be a time-consuming and laborious process, but it may be necessary for investors. Cryptocurrencies. Cryptocurrencies are a form of digital asset that can be used as a form of payment or a medium of exchange. Examples of cryptocurrencies are Bitcoin and Ethereum. In recent years, cryptocurrencies have gained appeal as an alternative investment choice. Some investors regard cryptocurrencies as a store of value comparable to gold, which has contributed to this perception. Putting money into virtual currencies is likewise known to be fraught with peril. The prices of cryptocurrencies are prone to making abrupt and dramatic changes, which can result in severe financial losses for investors. In addition, because there is currently a lack of regulation in the cryptocurrency market, investors may be susceptible to fraud as well as other sorts of manipulation. Investors who are thinking about buying cryptocurrency should be prepared to conduct their homework and have a solid understanding of the associated risks before making any purchases. They should also be prepared for the possibility of a significant degree of volatility, and before investing, they should decide how much of a risk they are willing to take on personally. It is also essential to emphasize that cryptocurrency investments ought to be regarded as speculative investments and should not constitute a sizable component of the entire portfolio of an investor. That's an end for today's video. What are your thoughts on these investments? Let us know in the comment section below. And make sure to like and subscribe to our channel for more future